Hey everybody, Brian Shannon here from alphatrends.net. Hope you had a good week of trading. Let's take a look at the numbers. The S&P 500 was up slightly here, about a third of a percent. The NASDAQ lost a little bit of ground, and as we'll see shortly, I think mainly due to the weak action in Apple. The Russell 2000 did well, up about 0.75%. The semiconductors and the banks really were the strongest, though, capped off by strong performances today. And oil continues to lose ground, so that's a good thing for consumers. And let's take a look at what we have here. So looking at the charts, which by the way, my charts have a different look to them. I can't quite figure out how to get it to revert to save back the way I had them. But anyways, we'll start off with a daily chart. The S&P 500 clearly is still in an uptrend. Anyone who's trying to short this thing has got it wrong at this point. Eventually, there's opportunities on the short side, but not while we have such a strong uptrend here. We pulled back down to the prior little resistance that we saw here about 2 weeks ago. That became support, and we're holding above a rising 20-day moving average as well. So it gave us a little bit of reason for caution earlier in the week, but it was actually, to me, pretty surprising that the market was able to once again get back above that 5-day moving average and hold above it for the week. So going into next week, I think the first important level that we'll want to monitor is basically down here at about 206.50 to 206.75. That's going to be our first important band of support that we'll look to see hold. And as long as we remain above that level, the buyers remain in control, and you have to consider this market as innocent till proven guilty. If we break below that 206.50, I wouldn't really expect a disaster, but we have to look at things such as this trend line, and that kind of ties in with that level. So perhaps we would see a little bit further pullback and test this past week's lows. But again, we've got a very strong market here, and short is obviously the wrong way to be looking at it. The NASDAQ, for its part, again, it wasn't as strong, but we do still have a very strong market above a rising 10-day moving average here. You can see it's been really pegged to that, and now we're seeing that this past week, although we were up a little bit, we really kind of look at it as more neutral in here, just that is the action of this past week. There's nothing to suggest that the market's going to pull back down, but I think the important level for next week, as long as we remain above this 104.50 to 104.60, this is our important band of support for next week. And right now you can see that we just kind of, we had that gap down Monday and just ground higher throughout the week. The 5-day moving average is declining, but that'll change first thing Monday morning as we get rid of that, after about the first half hour, that means it'll start to flatten out. But right now, again, the market just seems to be pausing here. It doesn't indicate that there's nothing here to indicate it's about to get hit hard. But if we drop down, we'll want to see that 104.50 level hold as support. If it fails to hold support, then we have to become a lot more defensive, because a breakdown below that level that then could create a lower high, act as resistance, could be what leads to a deeper sell-off. We're in a seasonally strong period of time for the market, so I'm not expecting it. But again, it's not about what we're expecting, it's about what we're prepared for. The market gives us unexpected outcomes quite often, and if we can be prepared for them and manage our risk, as I always say, risk management is job number one, then if the market does reverse, it doesn't have to be a disastrous thing for you. It's something that you can limit your losses to small losses, or be able to lock in much bigger gains and not give away the gains depending on how you're currently positioned. The Russell 2000, for its part, is really kind of neutral here. Looking at that daily time frame, we had we had these higher highs and higher lows over here, but now we're kind of really turning a lot more neutral. We've got the 10 and 20-day moving average pretty much flattened out in here, and on a 30-minute time frame, let's actually take it to a 65-minute time frame. You can see here the bigger range really is at 114.50-ish level is the bigger area of support. Our band of resistance basically 118.30 to 118.70, and the band of support is 114.50 to 114.75. So right now, on the intermediate term, it's kind of neutral. If we break, if we come back down and test, we would want to see this level hold, of course. And as long as the market remains above a 114.5, then I think we continue to consider the intermediate term trend is neutralizing within a primary uptrend. So we're still optimistic about all these markets, in particular when you see the semiconductors, which have just continued to rally day after day in here. And anyone who thinks it's up too much and they're selling short is not selling short for the right reason. The right reason to sell short is because maybe the market breaks below a 5-day moving average, the 5-day moving average flattens out, and then we see a pattern of lower highs and lower lows below it. That's when you sell short, not while we still have a rising 5-day moving average, and especially when we continue to make higher highs and higher lows above that rising 5-day moving average. So again, here we're innocent till proven guilty. Our first important level of support that's likely to be found next week is basically 55.50 to 55.60. The highs from a week and a half ago right here did act as support on that pullback, and then we saw that this market is continuing to stair step higher highs, and now here's our higher lows. So 55.50, as long as we remain above that, you give the benefit of the doubt to the buyers. If you're going to sell short, you're fighting the longer term and intermediate term trend, so it just doesn't make sense. Financials broke out to a new high here today as well, and they continue to add to their breakout gains, I guess would be the more accurate way to say it, because we had seen, this market seemed like it was building energy here the last couple days. We're holding up above that rising 5-day moving average. It gapped up today and really held on to those gains well. So for next week, 24.45 to 24.60. This is our band of support that we want to see hold. As long as we remain above that, then you should expect to continue to see higher prices. If we pull back down into that range, it just becomes a little bit more neutral. It's not something to panic about. We have momentum at our backs, and you just don't want to fight that type of strong trend. Gold this week lost I guess it was, let's take a look at that. Gold was what? It was up 2% on the week. It didn't look like it after today's move, and we're still, I'm still thinking that gold, I don't understand why people buy and sell this with all these gaps higher and lower. It's just got to be frustrating as hell. But looking at that weekly chart, we still have the possibility in this market that this is a failed breakdown and could squeeze higher. The problem is it's not doing so in a quick way. If you remember back to how we've been comparing it to the Russell 2000, once it broke down and trapped people, it rallied very quickly. That's not happening with gold. So I still think that, again, I don't understand why people trade gold. That's up to you if you decide to. It's not for me, but I get enough questions about it. We've got this trend line here, and I think that really for the buyers to be considered back in control of gold, you probably need to see it clear this week's high and hold up above that level. So obviously, or maybe not obviously, but the U.S. dollar continued to rally, and that's still in a solid uptrend. You can look at it and say it's up too much, and think about 2 years ago. Everyone was saying the dollar's done, it's finished, it's a currency of the past, and we see that it 3 weeks ago it broke important resistance here, and it's continuing to move higher through these prior levels of resistance. So prior resistance has the potential to become resistance once again, but there's nothing to say that, for instance, this level will halt the advance in the US dollar. It's in a strong uptrend, and that's what you need to focus on as price action. Bonds 2 weeks ago broke beyond this little consolidation within their primary uptrend. We've got a rising 50-day moving average. We've got a strong weekly chart as well. So the bonds continue to move higher, and breaking below 120 would be the only reason for concern in this market, I would think. Apple, for its part, did lose ground this week. It had that big sell-off on Monday, and when we look at a 10-minute time frame, you can see that we're still below a declining 5-day moving average. So in the intermediate term, it means that there's no reason to be looking to buy Apple for a swing trade on the long side. And we've got a very strong uptrend, obviously, still in the daily time frame. It's trying to find support here at that rising 20-day moving average, but it's not. But we have conflicting messages on different time frames. So for me, it says either you're going to be a day trader in Apple right now, or you're going to. The best bet is to sit out and wait for better evidence that the market has in fact fact begun to turn. If we take a look at the volume weighted average price since this event, so that's actually on Monday, our 5-day volume weighted average price, that's the average price that the stock traded at this week, is right up here at about 115.5. And you can see that's kind of been a pivotal level as far as support and resistance goes. So 115.5 tells us that the buyers are trying to take control, but the average participant this week on the long side was down about 50 cents because the average price was 50 cents higher than where it is right now. So Apple remains kind of neutral. By the way, I want to mention very quickly that my book, available at technicalanalysisbook.com, is right now still the same price but free shipping. So I've never done that before, but in particular, if you're overseas, that's a great deal to save some money. So technicalanalysisbook.com. Let's take a look, though, also at at oil, because oil obviously has been in this huge downtrend, and it's showing no signs that it's ready to reverse higher here. So again, it shows that, you know, people who fight these trends are going to continue to have a very difficult time with the markets. And right now, it's kind of interesting too that some of the bigger momentum names like Amazon, we've got Google, they're all losing ground here. And, you know, for instance, Google is making lower highs and lower lows below a declining 10, 20, and 50-day moving average. Twitter, same case. It's, you know, it broke support over here, and I wouldn't be surprised to see it down near 35 bucks a share. LinkedIn holding up better than some of the other momentum names, but Netflix clearly still having trouble after that gap lower. Tesla having trouble, and Tesla's actually getting close to the year-to-date volume-weighted average price, which is just a little bit lower. That chart is incorrect for some reason. Alibaba also, you know, we spoke about this chart as it broke above the 5-day moving average over here and above the year-to-date volume-weighted average price, which we can see on this chart was over in here. And, you know, I wouldn't be surprised to see us meet that volume-weighted average price year-to-date at some point in Alibaba. We've got lower highs and lower lows. We've got a declining 5-day moving average. And GoPro, same thing. GoPro looks like it's in maybe a little bit of trouble. If it breaks these lows, then the volume-weighted average price year-to-date in there, we can take a look real quick, is down at about $62.77. A couple other names. I think that, you know, I've spoke about Taser at length, and, you know, we had gotten shaken out at Alpha Trends, but got back involved in it this week. Taser's just a great opportunity here. I mean, it's certainly getting extended. You have to ask yourself, as always, where does it come from? Just from 13 bucks a share, nearly doubled over the last month and a half, but still a great looking longer term chart. So hopefully some of you did a good job of holding that stock. Another setup that's actually kind of similar to Taser is INFN. This is Inferia Corporation. I say it's similar just because of the chart. We broke multi-year resistance here on big volume, and that did occur actually with earnings. If you look at the monthly time frame, you can see here this is, you know, going back to 2008. We haven't seen these levels, and it broke that level. Now we've got a very big short position in here that's underwater in the stock as well. And I took a look at the headlines. It looks like the company has good fundamentals, and I measure that by saying, you know, are they selling more stuff? That means, are their revenues going up, and are their profits are they making more money doing it? Are their earnings going up? And that's the case for this stock. So this is a good one to keep an eye on next week, in particular if it can get back above the high from this week at about $14.80. Back above that, we've just got this little peak here, and it should be smooth sailing higher. The other one that I wanted to talk about is a real speculative name, and that's NVAX. This is a biotech company, and I consider all biotechs to be very risky. But you can see here we broke some resistance a couple months ago, and we were still, you know, that resistance in that general area has held as support. We've got a rising 10, 20, and 50-day moving average, and if we back it up to a weekly time frame, you can see this has been a significant level here that we've got a good longer term chart. We've got a big short position, and with biotechs, you never know what those shorts know. The risk is they can gap lower. I actually own some call options on this, but the interesting thing here as well is that the volume weighted average price year to date is where we found support as well. So I think your absolute worst risk case risk is down to about $4.80. But I think getting above the high of the last 2 weeks at about $5.53 is what ought to get this stock moving. And for more aggressive traders with who don't have much patience with stops like myself, I think you could get away with a worst case stop actually at about 525. Either way, it's up to you to decide how to trade these. I did want to point out also a free tool on Alpha Trends. So let's take a look at that real quick. We put this up this past week. Where are we? Here we are. Anyways, on here we have the tools, and under that we have, of course, this pivot calculator, which I think I've introduced to you in the past, and there's a video about how to use that tool. What we added this week was a Fibonacci calculator, and there's a tutorial video here as well, and then it tells you how to use this. So those are some good tools for the technically minded crowd. Otherwise, you wouldn't be watching this, I think. Anyways, again, I hope it was a good week for you, and I'll talk to you next week. Have a good weekend.